It's Tom Aspray with the Viper Report marker wrap video for the week ending May 9th. A few technical difficulties today, so the third go around and it'll be a little shorter than normal. You can see we have last week's videos already posted on the site. In that, I really concentrated on the new highs in the AD lines, what that meant going forward, and if you didn't see that, it shares some pretty important information. Also, a link down below here if you're do one-on-one training. That got some nice comments from some of my past students a couple weeks ago when the AD line started to turn, and they were able to, in some cases, buy some of the big tech names as they were dropping down towards their lows. So that's worked out well for them. On Saturday, I posted a new article on Forbes. I hope you get a chance to read it. We'll try to include a link. Pretty provocative forecast, one of my clients told me, but it's been a rough 3 months for most investors. They got way too long on the election results and long again at the start of the year, and they are probably just about given up on the stock market again. That's what the sentiment data would say. And a big thing of the AD lines is they'll often tell you when the sentiment, is turning from too bullish to correction mode. Correction mode is always necessary, and in a bear market you get a rally, that's a correction. You get the end of the world's coming. People, they're like we saw in May of 2008. But so this is still a bull market. The fact that we made new highs for the S&P as well as the QQQ AD lines indicate that they'll both make new highs. Doesn't tell you how long, could be, a couple of weeks for, the S&P. Probably will take longer for the Q since it's 9% below its high. So, if you look in the article, you'll see some examples. We'll quickly look at the current, a weekly chart closed right on the 20-week new high, substantial new high on the weekly AD line. And you can see down here, the sentiment, finally had a big shift last week. If you want to look at that any more closely, we suggest you back it up here. You can go to search AAI survey. You'll come up with a table like this. So last week it was 29.4% bulls, up from 20.9. And in the bearish camp, we went from 58.3 down to 51.5. So, that pushed the differential, from below minus 30 up to minus 22. So that's necessary. So we're still well below the long-term averages of 37. So that means there's plenty of buying action or available powder on the sidelines. A couple examples in the article. One of my favorites is from 2018, but there was also later ones, and I add to that collection as I do with the students in the course. But 2018 we peaked up here in September. AD lines peaked like the S&P 500. This line, see, we got a sharp rebound, at the start of December, which was really a fake out, and you can see we didn't make a new high and then plunged again, and we saw that pattern of way too many bulls here, very few bulls down here on December 10th. Had a big washout at the end, day before Christmas. Stocks just got hammered. A bunch of headlines. If you look, if you Google, recession December 2018, you'll see a bunch of people projecting a new recession. Obviously, we didn't get that. So, but the nice thing here, so once we cleared to a new high here, this line B, before the end of January, that forecast that we were going to go from here above this level, which as you can see we did in May, and also illustrates that this little pullback in the AD line here, that's what I teach, is this sort of pattern here, and you can see we had a big decline in bullish sentiment there, so everything was ready to stimulate some more buying. Current chart on the Qs also looks pretty strong. There's over 9% below its all-time peak. Sharp new high in the weekly AD line. You can see during the bear market for tech in 22, the sentiment, peaked out here in April and May. Then in September, October, the Qs were making a new high. Sentiment had already peaked out, and then by early 83, when most of Wall Street analysts were negative on tech, it started looking more friendly from a sentiment standpoint. You can see here, this is often what you see, another sharp dive, point E, during the correction from July of 2023 to October of 2023. Also included the S&P here along with the NASDAQ composite. You can see it's still well below its highs here, but the AD line has not yet made a new high. So we're watching for it to move above that, but it certainly is positive. Moving average is starting to turn higher. A quick look at the daily charts. You can see that the 20-day here in red, 20 exponential, is about ready to cross above the 50-day moving average. So certainly a pullback into the location, the convergence of those two in the 552 area would not be surprising. I think there'll be an opportunity to do more buying. You can see strong breakout in the S&P 500 AD line. The length of the trading range is important. So, that favors that this is just not that this breakout is going to last longer. Stocks only broken this downtrend well below its highs, whereas the daily looks pretty good. This is kind of the phase ones you see, so above the moving average. Started getting those who follow AD analysis interested. We broke this steeper downtrend in pink. That was sort of like phase 2, phase 3 last week, and then phase 4 will be when it makes a new high. The 90% chart does allow for a pullback also. You see a doji on Thursday, a lower close, but no doji sell yet. Only 3% more S&P stocks were lower on Friday, 5.7 in the 1500, and 20% on QQQ. So, there is some loss of buying, and even though we may see some better trade news during the week, we could see some worse one, and that'd be a perfect excuse for another sharp but brief decline. High-low analysis has improved. I guess I'd rate it about neutral. The low number of new lows. So on Friday there were 103 new lows, 92 new highs. So that's kind of would like to see those numbers flip. Really got to get above 200 to 250 in the new highs to signal some strong buying. And no evidence of that yet. For the New York Composite, you can see a slight rise in the number of new highs and flat action on the new lows. So encouraging, but not really bullish yet. Nothing exciting from the put call analysis other than the fact that the 0.77 on the calls reflects too much bullishness right now. So it could certainly bounce early in the week as the market corrects. You can see the index, probably this uptick on Friday also represents some new put buying for the indices. The VIX, VXN, both are still below their moving averages, declining. So if we do get a little pullback, you could see a bounce here, but it would take some time before it could start a new uptrend, in my view. Let's look at some of the TNJ watch lists. New weekly buys, AIEQ, the ARC Next Generation, iBuy, IPO, PBW, and TAN. Still negatives down here are the banks, Apple, etc. If you scroll down further, these were sent out earlier this morning. 36.6, still below that 50 level. 40% in the growth, doing better than value at 18. XLF, closed above its weekly or its quarterly pivot while XLE finally gave a daily buy. And the inverse ETFs, still favors the long leveraged and not the short ETFs, which have been so popular earlier in the year. If you look down into the sector report here, they said energy sector is not, we have ExxonMobil, CVX, and Hess. Chart, could be trying to bottom here, but, it needs some work. Materials, also range bound below its moving average. The bright spot comes in things like the industrials broke out of this trading range. We've been talking about Deere, Caterpillar, GE, Honeywell. They've all started to get green across the board. Consumer discretionary chart suggested is turning. I'd like to see a move above this last peak. Tesla may have started lit the flame for that because it generated a weekly positive. And there are a bunch of other ones that could join the party here. Starbucks, CMG, etc. Amazon are just barely negative. Healthcare looks like it needs a doctor. Financials, still doing pretty good. American Express, the latest one. Some banks are in there, though the bank ETFs are still not looking all that great. Technology strong at 83.3, and communications 66.7. Disney showed up, of course, with its earnings, and AMD and TXN showed up in the technology late in the week, so a 3-day for TXN. And then the utilities holding above 50. Real estate, PSA, closed above its quarterly pivot. In the themes report, some good signs, for the cybersecurity, 87.5. The AI mix that Jerry put together, 85. And the robotics, 66.7. Also, if you get down into the EV drive, 90%. You can see Rivian, etc. And of course, Tesla now is still below its quarterly pivot, but it's a lot more green happening there. Ground transport, only CSX has a 3-day in terms of railroads. Air transport, FDX and UPS are daily, but not lots of red in there. Retail, also, a daily negative ETS on Walmart, but a positive weekly. Costco looking a little bit better. It gave an hourly. Hotel leisure, also looks pretty strong here with a new weekly in IHG and in Hilton. And then if you get down into aerospace, I'm still watching ITA, but looking a little bit better there. And then the NQ, the largest gauge, Tesla, shows up, but we have NVIDIA, Meta, and Broadcom. Broadcom's already, it's green across the board. And of the Dow largest stocks, not a lot of new buy signals or new sell signals there, but 75% are positive. Well, we did add to our positions in SPY and QQQ last week. If we get a further pullback this week, we'll be doing some more buying as well. Hope you found this information beneficial, and hope you get a chance to read this article. And once you do, please send me any questions, comments. I imagine this might stir up a little bit of controversy. We'll touch base with you next week again. Hopefully we'll have all the technical difficulties figured out by then. Thank you.